If you stopped working tomorrow, how long could your lifestyle continue without a paycheck coming in? For most high-income professionals, doctors, executives, small business owners, the honest answer is not long, because the truth is, income isn't wealth. Assets are wealth. And the people who've quietly built generational wealth, they don't just earn more money. They own systems of assets that produce money for them, month after month, year after year. The system has a name. It's called the family office. And in this video, I'm going to show you how you can build a solo family office for yourself, even if you're starting with just yourself, with or without your own capital, or maybe a few trusted partners. I'll break down step by step how wealthy families invest in private markets, businesses and real estate, and how you can do the same in a smart, structured way. By the end of this session, you'll understand exactly how to source deals, underwrite them, structure and finance them, and then manage them in a way that creates long-term, cash-flowing wealth. Think of it as the blueprint to stop working for money and start having your money work for you. If you're a high earner pulling in a 6 or 7-figure salary, you might be surprised to find you still don't feel rich. You're not alone. Many high-income professionals feel like they're on a treadmill. In fact, more than 60% of people with high income report that they live paycheck to paycheck or don't feel wealthy despite their savings. Why does this happen? The simple answer is that high income alone doesn't create wealth. If you stop working, the paycheck stops too. High salary or not, trading your time for money keeps you on the hamster wheel. You might have a great job, doctor, lawyer, executive, business owner, but as long as you are the one working for money, you haven't achieved financial freedom. True wealth comes when your money works for you, not when you work for money. Think about it. How do the ultra wealthy stay wealthy? The people making high 7 or 8 figures a year. It's not by clocking more hours at the office. It's by owning assets that generate income. Assets like businesses and real estate that keep paying them day in and day out. The rich get richer because they invest, while most people, even high earners, are stuck only earning. As the old saying goes, if you don't find a way to make money while you sleep, you will work until you die. I had to learn this the hard way myself. I spent years in the elite corporate world advising multi-billion-dollar companies at McKinsey, working on Wall Street deals, and helping close over $200 million in real estate transactions. By all measures, I was successful on paper, but in reality, I was like a highly paid race car driver stuck on someone else's track. Despite the big deals and big hours, I was building other people's wealth, not my own. My clients and bosses owned the assets. I just earned the salary. I remember one pivotal moment. After closing a particularly massive deal, a luxury property worth tens of millions of dollars, I looked at the profits the owners would earn from their asset for years to come. Then I looked at my compensation for helping making it happen, and it hit me that no matter how high my paycheck went, it would never set me free. I was relying on active income, while the people I worked for were reaping investment income. That was a wake-up call. This realization led me to study how the ultra-wealthy manage money. One phrase kept coming up again and again: family office. A family office is essentially a private entity that manages the investments and finances of a wealthy family. Imagine having an entire mini company whose only job is to grow and protect your capital. Sounds nice, right? Billionaire families have teams of professionals acquiring assets, analyzing deals, and handling day-to-day management of investments. The family office's sole mission is to make the family's money work for them, so the family members don't have to labor for a paycheck. Now, you might be thinking, good for them, but I'm not a billionaire family. That's true. A traditional family office serves ultra-rich families, but here's the insight. The principles that family offices use can apply to anyone with a decent amount of capital and income, either from you or from a partner. You don't need hundreds of millions to start thinking and acting like a family office. What you need is a systematic approach to managing and investing money, no matter where you're starting from. If you have $200,000, $2 million, or $20 million. Family offices focus heavily on investing in assets that produce cash flow and grow in value. Yes, they hold stocks and bonds, but a huge portion of their portfolios is in private investments, real estate, private businesses, alternative assets. In fact, family offices on average allocate about 45 to 55% of their portfolios to alternative assets like real estate, private equity, private credit, and hedge funds. They do this because these assets can generate steady income and a lot of appreciation beyond what typical stock portfolios yield. They invest like owners, not savers. Perhaps the most important thing family offices do is think long-term and strategically. They aren't trying to get rich quick. Their goal is to preserve and grow wealth over generations. They carefully balance risk and reward through smart asset allocation and due diligence. And crucially, they leverage other people's skills and time and money to accelerate their wealth building. They hire expert managers, partner with co-investors, and use debt financing to amplify returns. All of this might sound complex, but at its core, the family office approach is about shifting your mindset from being a worker to being an owner. It's about running your personal finances like a business, your business, with the goal of building an ever-growing engine of passive income, investment income, because sometimes it's not so passive. I realized that if I wanted true financial freedom, I needed to become the CEO of my own finances and build what is essentially a solo family office for myself. I've been saying this quite a lot, but you might be thinking, what is a solo family office? Well, think of it as a modern, lean operation where you and maybe a small team or an advisor actively acquire and manage income-producing assets, much like a family office would, but scaled to your level. The solo family office is about treating your personal wealth the way a professional investor would, strategically, systematically, with an eye toward long-term growth and income. Why solo? Because you don't need a huge staff or billions in the bank to do this. You and a trusted partner or mentor can execute the same playbook the big family offices use, but with far less overhead. It's about being efficient and focused. Every dollar is given a job. Every investment is made for a reason. You essentially create a mini organization for your wealth. Here's a simple way to look at it. Imagine each of your dollars is an employee. Right now, are most of your dollars just sitting around, or are they working hard to recruit more dollars for you? In a solo family office mindset, you deploy your money strategically so that each dollar is busy earning you more through rent checks, dividends, business profits, while you sleep or while you focus on what you love. This is how you eventually escape the grind and achieve financial independence. I'm building my own solo family office right now. I'm working with a co-general partner to raise a $100 million syndication, about $70 million in debt and $30 million in equity, to buy, improve, and long-term hold retail centers in Texas. My partner already owns $100 million of retail real estate personally, and I've partnered with him because he has a strong balance sheet, and I bring the finance skills to raise the capital and deploy it using other people's money. And that's the point. If you've got skills but lack capital, you can still build your own solo family office by partnering with someone who is well capitalized. The model works both ways. You either bring the money or the expertise. Put these together and you can build wealth at scale. And if you want help building your solo family office, if you want me by your side, underwriting deals with you and making sure you actually get your first deal under contract, there's a link in the description. Book a call with me and we'll see if it makes sense to work together. So how do you actually build a solo family office? Well, it comes down to executing a repeatable process, a system for acquiring and enhancing assets. Over the years, through both my high finance experience and my personal investing, I've refined a step-by-step system to do this. Let me break it down into a few clear steps. Number one, find and acquire high-quality assets. First, you identify opportunities worth investing in. These could be private businesses, commercial real estate properties, or any income-producing asset that you understand and that has growth potential. Think of this like deal scouting. Family offices have entire teams scouting deals. In the solo model, you leverage your network, industry knowledge, and proven frameworks to find these gems in the rough. Not every deal will be a winner, so you need a strong underwriting discipline, essentially the skill to assess a deal's risks and returns with precision. This step is crucial to avoid costly mistakes. Remember, sometimes the best deal is the one you don't do. We use rigorous analysis, but we simplify it with templates and AI tools that even complex financial models become intuitive. Number 2, raise co-investor equity capital. One of the secrets of the wealthy is using other people's money, OPM. You don't have to fund every deal 100% yourself. In fact, you can go further and reduce your risk by bringing in co-investors, perhaps friends, colleagues, or other high net worth individuals who want a piece of the action. If you find a great investment, but it's larger than what you can take on alone, you can pool capital with a small group. This is exactly what big investors do. It allows you to take down bigger assets and diversify without over-concentrating your own money. Plus, it lets others share in the wealth building. You become an opportunity provider to your network. Now, raising capital requires trust and a good deal structure. People need to feel safe investing with you. That's why part of the system is learning how to craft a clear deal thesis and investor pitch, so co-investors see the upside and feel confident in the plan. Number 3, secure smart debt, leverage. Alongside equity, most deals will use debt financing, loans. This could be a bank mortgage on a property or an SBA loan on a business, for example. Why debt? Because leverage is a powerful amplifier of wealth if used wisely. It lets you control a larger asset with less of your own cash. For instance, in real estate, if you put 20% down and the property value increases, your return on that 20% is magnified. That is essentially other people's money, the banks or the lenders, working for you. Of course, you must be wise in using debt. The deal's cash flow should comfortably pay the debt installments. We don't take on reckless debt. We use smart leverage that is supported by the asset's income. In the solo family office approach, we treat banks and lenders as partners. We shop for the best terms and use debt as a tool to juice our returns, while always protecting the downside with proper risk analysis. Number 4, install professional management. Here's where many lone investors fail. They try to do everything themselves and end up with a second job. A solo family office is not about buying yourself a high-stress job. It's about owning assets that run smoothly. So for each asset you acquire, put a management team or a system in place. If you buy an apartment complex, you hire a solid property management company to handle tenants and maintenance. If you acquire a business, you make sure there's a competent manager or management team running day-to-day operations. You might oversee strategy and major decisions. After all, you are the asset owner, but you shouldn't be the one unclogging toilets in your rentals or answering customer service calls for your business. By delegating operations to pros, you free yourself to work on the business, not in the business. This also makes your model scalable. You can own 5, 10, 20 assets without cloning yourself 20 times. This step is all about building a team, even if it's just a few contractors or a few key hires, so that the asset produces income for you with minimal active intervention. Number 5, execute a value-add plan. When you acquire an asset, especially businesses or real estate, there is often potential to make it more valuable. That could mean renovating units in a property to charge higher rent, streamlining costs and improving sales in a business to raise its profit, or even something as simple as better marketing and customer service. This is where your experience and creativity come in. You force appreciation by improving the asset's income or reducing its inefficiencies. It's like polishing a diamond in the rough. We're always going to deal with a clear strategy to add value. That's one thing that sets apart a solo family office investor from a passive 401k investor. We actively create our gains. We don't just hope and pray for market luck. A simple example, I was involved in a boutique hotel deal where we modernized the rooms and added a new event space. Within 18 months, the hotel's revenues jumped and its appraised value rose even more. That kind of manufactured growth is extremely powerful. It increases your equity and also the cash flow the asset provides you. Number 6, you refinance or sell to recycle capital. After you've improved an asset's value and stabilized it with good management, you have options. 2 common outcomes are to refinance or to exit. Refinancing means you go back to the lender and say, hey, this property or business is now worth a lot more than when I bought it at, and I'd like to take some cash out or get a better loan. Banks often will refinance based on the new higher value, which lets you pull out a chunk of your initial equity and sometimes all of your equity while you still continue to own the asset. That pulled out cash then can be reinvested into the next deal, fueling your growth without you having to save up more money from your job. It's a repeatable snowball. Or you might decide to sell the asset outright if the market conditions are favorable or if you reached your target price. When you sell, you realize your gains, and again, you can roll these profits into the next investments via a 1031 exchange in real estate to defer taxes or other strategies to be tax efficient. Whether you refinance and hold for the long term or sell for a big win, the key is you extract capital to do it again and again. This is how one property becomes a portfolio of 10 properties over time, or how one business acquisition leads to multiple acquisitions. You reinvest the gains. It's rinse and repeat cycle. Each round, your solo family office grows stronger with more income streams coming in. And finally, number 7, rinse and repeat. This is how you build your portfolio. The final step is basically looping back to step 1 and doing it again, bigger and better each time. Over years, this is how you build a robust portfolio of diverse income-producing assets. Maybe you start with a couple rental properties or a small company, and a decade later, you find yourself with an array of investments, a personal empire that generates multiple streams of income. This diversification not only grows your wealth, it also protects you. If one asset faces a downturn, others keep producing. You become far more financially resilient than someone who only has a single source of income, like a job or one business. Notice something about this process. Nowhere did I say, and then you work 80-hour weeks forever. Quite the opposite. Yes, up front you put in the work. You have to find deals, you do due diligence, arrange financing. But once the asset is acquired and set up with management, it starts paying you back continuously. Each asset is like planting a fruit tree. You work to plant it and nurture it initially, but eventually it grows and bears fruit season after season without as much effort. That's what a solo family office builds. Imagine fast forwarding a few years from now. Instead of worrying about whether your high paycheck will last or how you'll ever retire comfortably, you have a portfolio of assets generating income for you every month. Perhaps you own a couple of apartment buildings that deposit rent into your account while a property manager handles the calls. Maybe you own a local business, say a car wash or a software company that sends you profit distributions each quarter while a skilled operator runs the daily operations. You've got some money in a private equity deal that's on track to double, and another chunk in a lending fund earning steady interest. At this point, work becomes a choice, not a necessity. You might still love your profession and continue doing it, but you're no longer solely dependent on it. That is an incredibly liberating feeling. You can take a sabbatical, spend more time with family, pursue a passion project, or scale back on work without fear because your assets have your back. That's what it means when your money is working for you. Even more, you're building generational wealth. High income can vanish in a generation or as soon as the paychecks stop, but assets, if well managed, can continue providing for you and your children and beyond. By adopting the solo family office approach, you're effectively acting like a small-scale Rockefeller or Buffett. And why not? Everyone starts somewhere. The difference is a mindset and a plan. I often say, don't wait to buy assets and wait. Time is your friend here. The sooner you start accumulating and compounding, the more profound the results. Whether you're 35, looking to be financially free by 45, or whether you're 55, thinking about how to ensure a comfortable retirement and a legacy for your family, the best time to start this was yesterday. The second best is today. If all of this resonates with you, then I invite you to consider taking this journey with me. The fact that you've listened this far tells me something important about you. You're serious about making a change. You don't want to be the high earner who has nothing to show for it at the end of the day, except maybe an impressive resume. You want to be the person who turned income into true wealth, who has a portfolio of cash flowing assets and the freedom that comes with it. I'm here to help you do exactly that. I've laid out the vision and the roadmap. The next step is to execute it. And remember, you won't be doing it alone. I'll be right there with you as a guide and a partner. I'll work hard alongside you, shoulder to shoulder, to build your system. Find those great deals, raise the capital, assemble the team, and scale up your solo family office one deal at a time. This is about empowering you to play the wealth creation game at the highest level. No more settling for being just a salary man or a salary woman. No more anxiety that you're one corporate reorg away from financial trouble. Instead, you'll be in control, running your solo family office confidently, making moves that grow your net worth and investment income year after year. So here's what I want you to do. Click the link below and book a call with me. Let's talk about your goals, your starting point, and how we can build your solo family office together. All it takes is that first step, and I'm here to take it with you.